The Nifty is now up almost 77 points in pre-opening, and it's led squarely by ICICI Bank, up about 1.7%, Kotak Mahindra Bank and Reliance. In fact, all the result reactions are on the upside this morning. Reliance is up about 0.7%. Infosys has made a big comeback this month. It's up about 9% this month already, and the stock is up about 0.6% right now. In fact, it has a lot of other technology stocks for company. TCS is also up in the green. But let's continue to discuss about earnings. Creditaccess Grameen is the first corporate that we're speaking to today. The net interest margins have expanded to 12%, and high write-offs continue to aid the gross NPAs this quarter. Udaya Kumar Hebbar, who's the Managing Director and Chief Executive Officer at Creditaccess Grameen, joins in now to talk about that. Mr. Hebbar, good morning. I want to understand what the loan growth targets are for the full year, because demand has come back in a big way, especially in gold loans. What is the expectation?
Good morning and happy Diwali to everybody.
Happy Diwali to you.
We guided about 24 to 25% loan growth this financial year. And if you see today, as of September, we grow 24%. So that means we are on track in terms of delivering AUM growth of 24-25%. Gold loan is not our focus. We are on microfinance as a key 99% of our book. Maybe gold loan we are piloting, but we don't know. Probably the traction in terms of portfolio would come only next year or so. Okay. in terms of gold loan. Oh. But early JLG, 97% of our book is JLG, and it's a good traction there. We believe we will be able to deliver the guidance what we gave about 24-25% without any difficulty.
Okay, all right. And your ticket size has been stable at around 45,000 odd, so 45,000. So I'm guessing that majority of the volume, the growth that you're talking about, will come in from customers, additional customers, and on the volume front. We get that on the loan growth. But my question to you, Mr. Hebbar, is on the NIMs. A large part of your borrowing is from banks. If I look at your standalone entity or even on the consolidated basis, and the cost of borrowing is going up. Now, you have said your cost of borrowing has gone up by 50 bips approximately. The RBI's hike rates by far more. Your NIMs are at around 12%. Do you think there's a downside risk from here? And also, I believe you're looking at changing your borrowing mix. Could you explain that to us?
Absolutely. So NIM, there won't be stress on the NIM because we have ability to pass on in case there is a further increase in the price. But if you look at last 6 months, our average cost of borrowing has gone up only by 30 bips, despite that's a large increase in interest rate by different banks because of the mix what we are using in terms of bank borrowing and international borrowing together. So our average cost of borrowing is not increased so much so far, and we are not believing that there will be large stress on the NIM because we have ability to pass on the pricing in case there's increase. So therefore, the 12% NIM should be intact for the remaining part of the year. And from a liability point of view, it's important to build long-term and stable liability with the diversification. Therefore, we are already working on many things in terms of internationalizing the borrowing. Almost 12% of our borrowing already international, and then the pipeline borrowing and undrawn sanctions, almost 20% are international, which gives us a long stable funds and a diversification beyond borders. This is very important for a growing microfinance book. In the same time, it may lead
Mr.
to costly borrowing. Yeah, yes.
Mr. Hebbar, just want you to repeat that. You're saying that international borrowings is how much? 12% as of now. And you're
currently
and you're looking to take that number to
20% actually. So our fresh borrowing, almost 20% is international borrowings.
Okay. Now, I don't worry so much about your liability side at all, Mr. Hebbar, but if you can give us a little more color on the asset side. We hear about pain in the bottom of the pyramid in rural areas. FMCG companies are reporting 1% volume growth. Would you worry if, any part of your loan book can suffer some kind of asset quality pain, especially if rates go up?
So not really, actually. So if you see today, we are competitively positioned to give a what you call suitable pricing. For example, in the microfinance segment, we are able to price much better than the competitors.
Mr. Hebbar, no, not just pricing. It is the ability of the person to pay. I mean, if the economy slows, say if the textile sector slows, I mean in terms of availability of jobs and good salaries.
I'll come there. See, microfinance is for the self-employment in the bottom of the pyramid who are in some kind of business. So their ability to pass on the cost to their customers is very high. That's why whether it's inflation or cost of borrowing, most are the net neutral for them or net positive for them. So we observe that our customers are not what you call suffers because of a slight increase in price or the inflation, because two are the components which you must be talking about. But what we observed in the last 12 months, so there's a good positive movement, there's a good demand, and then therefore we are not seeing any difficulty in this area for our growth and achieve our annual guidance.
Okay. All right. We'll leave it at that, sir. Thanks a lot for joining in and giving us an update on the business. By the way, just want to mention